what makes you think, based on the valuation matrix, both the US and European equity markets are undervaluated?
I think if you look at cyclically adjusted price earnings, I think the US looks a little bit expensive. And Europe still looks reasonably cheap. This is the headline numbers. Of course, we are living in a kind of difficult and different economic cycle. Interests have been very low for a prolonged period of time, which hasn't happened in history. And therefore, assessing from an historical metric what's happening at the moment, it's hard. However, I think that the case is, growth in the US is strong and remains, on that path, in our opinion, and therefore, US should come up pretty well. Eurozone is more of a value trade. Of course, the risk there is that the US somewhat will be derailed by the other rest of the world slowing, but I don't think that risk at the moment is particularly high.
Okay. When you look at separate asset allocations over regions, aren't you not afraid that most big companies are so internationally diversified that spreading over regions is not so relevant?
I think that is a good and a bad at the same time. In a way, the fact that large manufacturers, for example, have diversified exposure could be a good thing. If there is a very idiosyncratic slowdown in one particular economy, it very much depends on what regimes we are living in. Let me give you a practical look at this. If you remember last year, for example, during 2013, when the Fed tapering story started becoming acute, actually small caps in US did much better than large cap, and the reason for that was that investors started looking more towards domestic producers rather than large cap producers. So companies that actually had very diversified exposure were seen more in a more negative way than companies that were just very locally focused. So my point is that it's very hard to say whether in general having global exposure is a good or a bad thing. I think on average, I would rather have unless I have a very strong view on a particular country, I think playing the diversified themes actually is a good idea.
In the last question, in the past year we have seen a lot of black swans. Do you foresee some of them in the coming year?
Well, I give you an interesting story on that one. One of my favorite economists, Stanley Fischer, who's now at the Fed, was asked a couple of years ago at a conference at the IMF. He was asked, so where do you see the next big risk for the economies? And Fischer looked at the journalist and said, I spent my last 7 years of my research looking whether my crisis would have come from my right hand or from my left hand, and then it came and hit me on the neck. So my point is that forecasting something really bad is difficult, because if there was a good probability of that event to happen, it would have been already priced. I think one thing that personally worries me a lot is the possibility that liquidity, which is very high at the moment, dries up. Because a world where that liquidity drying effectively materializes is a world that is potentially very bad for a number of asset classes, from more defensive to more aggressive. So I think from a multi-asset perspective, from a mixed investment perspective, a liquidity seizure is actually one of risks that you can classify as black swan.